We have Tony Dong. Tony, we've already introduced, but he is an author for publications like The Motley Fool, The Street, and many more. And he's recently launched his own website, etfportfolioblueprint.com. So make sure you check that out. He's an ETF expert. Tony, what's your pick?
ZGI. So just a question out here. How many of you own Enbridge in your portfolio? Come on, there's got to be more than that. You guys like Enbridge because of its high dividend yield, likely, but there's a lot of structurally attractive things about the nature of its business. For instance, 25-year contracts with many of its clients, insulation from energy prices because, well, these are fee-based contracts for moving natural gas and crude oil through its pipeline. Now, what if I told you there was something like Enbridge, but far more diversified and not limited to a single North American pipeline operator? That's ZGI. When you think about the assets that ZGI owns, we're talking about regulated utilities, pipelines, airports, water utilities. These are things that are heavily underrepresented in normal indices like the S&P 500, where I think energy only comprises about 4% and utilities around 4% too. So this is a way for you to access an asset class that most institutions are heavily involved in right now. For instance, the Canada Pension Plan, CPP, fantastic money managers, excellent long-term risk-adjusted returns. And one thing you might not know is that a significant portion of their portfolio is not in public equities. It is in alternatives. And a big portion of that is infrastructure. CPP loves going out there, buying stakes in airports, buying pipelines. And by doing so, they are purchasing the rights to those contractually obligated cash flows that these assets generate. It provides somewhat of a stabilizer, but more importantly, inflation-linked incomes. Everybody remembers what happened in 2022 when rates and inflation rose. Well, ZGI, along with many of these infrastructure-like ETFs, tank that perfectly. And I pitched this one last year too, and since then the price is up 16%, and that's without even factoring the dividend yield, which is actually really quite nice because, again, the underlying businesses in here, every quarter they're moving that gas through, they're delivering electricity, they're having airplanes land at their facilities, and every time that happens, a monetary transaction occurs, those cash flows accrue and flow to you because a lot of these entities have very favorable shareholder return programs in place. They increase those dividends every year, and opportunistically, they will buy back their shares. The problem with infrastructure is that unless you're a big money manager like CPP, it is really hard to get access to the best deals. And more importantly, not a lot of these are liquid in that it may be years before they are able to exit from their investment, before they get an opportunity for an exit. But with something like ZGI that is exchange listed, where it benefits from the creation and redemption in-kind mechanism of the ETF, where when you're buying this, you can be assured that the price is going to be very close to the net asset value. That kind of liquidity is unparalleled. You're not going to find it anywhere else but in the ETF structure. And, Valerie talks about democratizing access to asset classes. CLOs are the latest one. Infrastructure was one of the first and is one of the longest lived. And when I talk about adding an ETF as a satellite allocation in your portfolio, you want to make sure that it doesn't overlap with the rest of your portfolio, right? You can use a variety of tools online. BMO has a few, but if you check the portfolio overlap between ZGI and something like your asset allocation ETFs, it's actually quite minimal. And if you look at the correlation, this ETF has a history of zigging when the rest of the market zags because, once again, it is more sensitive to drivers of inflation. The mechanisms that make the companies in this ETF earn money are very different from, say, a tech company or a healthcare company. This is just one of my preferred tools for gaining exposure to what is otherwise, again, a very hard to access asset class. I'm sure many of you like the idea of owning real assets, but you don't like the illiquidity that comes with it. This is, in my opinion, a big tool for doing so.
Thanks, Tony. Infrastructure, a hot topic today. Moving on.